Here we are to the cash market close of Friday of the S&P 500 index daily, I mean 60-minute, so that we could decipher the daily movements in the S&P. And you can tell where the high was on the S&P mark-to-market close on Friday, but over here on the E-mini future, on this E-mini future, and this is 5 minutes before the opening bell, 6:26 a.m. Pacific Standard Time, down to 4 minutes, 12/12/2011, opening view, opening presentation. The cash market is over here at this value. The closing market of the S&P 500 index was up here at the 1255. So that means that when we get into the opening bell, that the lower level here, where these cash futures are, is ultimately going to be your opening bell support level, where you would look for an immediate turns and buyers would get control of that cash opening bell versus the pre-market value. So the pre-market value here is ultimately your drop-down bid to support level on the cash market opening bell in 4 minutes. Preview, once again, looking at the cash market value of the E-mini futures S&P 500 versus the closing S&P 500 index, how to apply that correctly. This is live. It's here. It's pre-market futures, and we're 3 minutes to the opening bell. Pre-market futures are 1 hour and a half. The opening cash market in the futures contract versus the closing bell on 12/9 right here. That was that Friday rally that has a gap down Monday. And we're going into that opening bell. And we'll be drawing trend lines down here without even looking at the chart. And then what we'll do is we'll put that over there. So gap down support. This is the cash market. It's been weak. It's live. It's opening bell. Here we are. We're within 1 minute of that opening print. We're gapping down $8 right now. That's a markdown bid. We're going into that opening bell.
Oh, it hit 780.
It's live right now. Yes, it did. Look at that low. Look at that low. $8 on that low. They marked that call down. There's that low. It's in. It's $1 off that. It's $1 off that. I'm watching the futures market, and I can see everything on that opening bell print, how they mark these calls down to 790. That's at 620 live. Opening first penny print was $8 low, and the close, and I put limit orders out there to watch these prices get made $4 below the market based on that equity coming off of that low, that 627.42. You can see that low, 621.8. They're trying to mark it up. Bid and ask on that call. 860 moved in, 930, 820 with an $8 low opening bell print. Whereas my wholesale entry, I'm not buying it and holding it down from $12. I get to buy down here. And I've got to know where I'm going to have support and how to square that 620 call, 1217, 627 pulling back. And I've got to watch that low bid on that low opening print to the bid and ask right here, right now, because that is the strength between the buyer and the seller, and you can clearly see the prints going off. And if this side is printing, then they're taking profit. 623.77 is your actual high. I'm watching the futures in the S&P also live on the opening bell as well. And I'm watching that. I'm watching that cash market. That cash market is doing exactly what it should do. And the thing about it is, I'm going to show the other side of your market at this low print with this option that made a low print, 19 volume at the 620 call. And it's 820 by $9 with the closing print there now. So what does the MMT do? We always buy as wholesale to that opening print as it contracts relative to the strength. It's still got that gap down. There it is. It's coming half of that distance. You can see that right here. You want to be $2 above that low during the consolidation. You're only slightly $1 above the ratio of the intraday opening print low to the bid. So the bid and the low, buyer and seller. Cash market over here. Mark down that 620 call to the wholesale bid on this opening bell. And how do I make a market? Take that spread and then sell it back to the public. This is the key focus of that opening bell. We have that live order at 6.7 on that $620 call. They're marking that print down. As we have been talking about, is that we could never get above that S&P 500 is getting marked down. There it is. I've got the futures market on that S&P, and you can clearly see what that S&P is doing. And it's marking the cash market is here. Look at the 60-minute chart right here. It's a 60-minute opening bell on the S&P Live MMTs, and you can see the selling here. Look at that, and this is a 60-minute chart, and you can see when you break minute period moving averages, it's coming down and testing this lower end of that trend line. That means that we're going to watch this reversal opening bell print. When we do come back up to half the distance, that would ultimately be your long side. If this can hold a higher level and start to build a base from this original breakout level right here on 12.9 MMT, that's your breakout high reversal right here. And you're on this side of it with this big opening bar today on 12.12. Okay? And it's the S&P 500 index there, and you can see it right here. The other thing that you can see clearly is a December 11th S&P 500 futures that just hit a bottom at our trend line that we drew, and we're down here at 1239 on this cash market that I told you in this live video in this S&P futures. I said in pre-market that it would catch up. So here, the cash market, they're both about the same now at the cash market. But look at the index. That is a big drop from the Friday's highs right here. And the thing about it is we rolled up on Friday, but we're on the outside of that. And you can see right over here, you can see the two. You can see the bottom being put in the futures. That's the December 11 E-mini S&P 500. That's your opening bell reversal. Everything that we have showed you, MMT, is where that liquidation would come into, and we talked about that in pre-market here today at 6 minutes into the opening bell. We spent 1 hour and 30 minutes talking about what today's trade would look like, what the qualifiers would look like, where that buyer, where that seller is. And when you have the reversals that we have said, they start until we make a bottom down here. And Google is going to break its lows. And yes, the bid that I gave you at $6.70 here, it hits a low of $7.80. That's okay. We're at 6.7 on that 620 call. You're printing the low right here, right now, in this opening bell with the futures market running at support levels with the big 60-minute S&P 500 index level reversal. Look at that. Look at that 60-minute opening bell on 12/12 taking out the majority of that Friday. But now listen, MMTs, if we find support and we start to get a green bar like this, then we know that we'll put in that lower end cash market support level and we would get net long. And we're trying to put in that 780 right here. I've got a bid. That means they marked up that put side of that market. Here's that 60-minute chart called the 60-minute S&P 500 index. That's where the Friday 12/9 opening bell, 6:38 a.m. Pacific Standard Time. Sellers in control. We're going to look and see where that buy side, the buy side cash market comes into play at these support levels. All right? So as the put side, like I said, here's the 12, 17, 630 put. We're already in these. It doesn't matter. What does matter is that the 625 puts got a 750 low with an 889 on Google on that side of the market with an actual close of $6 on Friday's cash market, and a 810 print with an 889 high. That side of the market's being cashed in.
Mario, I want to go along the TNA.
TNA, here's that low. We're 14 minutes into that opening bell. And yes, MMTs, we're live. Let's just talk about how nice it is to let it come down and make those bottoms and let these puts go up in value, and selling into these at the high is the right thing to be doing. Look at that market. It's 12 by 1220 with a 1070 print low. And what that means is that there's clearly distribution, and Friday's gains are being wiped out in the cash market. When we take a look at the actual futures market on the Emini Nasdaq 100, and this is it, and we're breaking that support line on this opening bell. Of course, it's the first 15-minute opening bell that we're involved in. And once again, in pre-market futures, we went clearly over how that pre-market futures would be a carryover, a rollover into that opening bell for that short side of that tape to pay, because they were doing that for about an hour and 4 minutes prior to getting to the opening bell. And once all the sellers clear out, we're exactly 16 minutes into the opening cash market of a low of these futures. When that goes higher, guess what happens? We start to put in lows here at 620.89, and we're bouncing. And we got a cash market of 750 on that call, marked down 440, and we're 16 minutes into the opening bell, applied to the futures. Nasdaq 100 futures. You've seen the S&P futures. S&P futures are finally gaining. And when this happens, it's time to go over here, Rick Goley, and bid at 780. Take it at 790. You're bouncing. Take it at 1 at 790. Take that ask and make a market here. That 750 low, it's 40-cent premium.
I got it, Rick.
All right. See, Rick Goley?
Oh, no, you doubled it.
Okay, there we go. There we are with that cash market, but here it is. Nasdaq E-mini 100 relative to bid and ask in Google, the leader. You can see right here we have a great, fairly
Did you get in,
movement
David?
right here at 391.66. Here you go. Here you
Just
go.
watch out for that half bar.
You're bouncing. Look at that cash market open. Right now we're going into the 20-minute bell, and there's a long day ahead, and this low is very vulnerable right here, because when you break that, you're going to go lower in the cash market to another wholesale bid. That means that this cash market, I have limit the order at 620. Cancel all 670, 620 bid. Get down below that bid, just in case this thing doesn't hold that bid and ask. We will preview this later. It is right now 6:49 a.m. Pacific Standard Time, MMTs, and that 20-minute bid and ask rule, mandatory rule, between the public starts in 1 more minute. And you'll have a complete 20-minute relationship. And the longer that you can stay above that delta line of 620.86, the stronger. There it is, 20-minute bell. There it is. There's that 20-minute opening bell. Cash market with futures, Nasdaq 100, call options, wholesale prices, getting below the market.